Hi friends, good afternoon and welcome to a very interesting conversation on the UAE corporate tax regime. Something which was expected and something which is uh, well in sync with what most of the international observers. I have with me Dr. Nabil Ahmed, who is a chartered accountant, cost accountant, and a PhD in finance. And he heads the global practice of the US. And Nabil is based out of Dubai and someone who's in the thick of actions at this junction. Welcome, Nabil.
Thanks, Devaka, and welcome everyone on the forum today. Thank you.
So, this would be the agenda for the day, friends. We would have a brief overview on the corporate tax regime, introduce the concept of tax groups, and it's a very interesting concept which we try to promote. What is the impact of the regime on free zones and certain other miscellaneous provisions, and we conclude from there. Okay. Now, Nabil, if you can take us through what's the history of taxation in UAE, especially given the VAT and the present corporate tax regime, that would be interesting.
Thanks, Devaka. So up until the 18, UAE did not have any kind of taxes, be it direct or indirect taxes. And in 2018, the government introduced the value-added tax, one form of indirect tax which is applied on purchase and consumption of goods and services. Though the UAE does not have any federal tax structure, but some entities, which is branches of foreign banks in UAE, oil exploration companies, do have some sort of Emirati tax which is still applicable on them. But on 31st of Jan 2022, the government has introduced the corporate tax regime in the UAE, which will be applicable from the 1st of June 2023 next year.
So there is no tax as of now for the calendar year 2022, if I'm not wrong.
You're right. So for this current year, there is no taxes applicable for the UAE companies, be whatever their financial year is, there's no taxes applicable this year.
And VAT at this point is only on domestic turnover, as is the case globally.
And correct. So the correct VAT is only on the domestic purchase of goods and services within the UAE.
Okay. Thanks. So now let's discuss about the reason why this tax system has been introduced. So if you try to take a step back and look at it from a more macro perspective, the OECD, which is the Organization for Economic Cooperation and Development, as it's called, is nothing but a group of ideally developed nations, which are capital exporting nations, and who feel that jurisdictions where the tax regimes are lower have been instrumental in the lower tax collections of their own home jurisdiction. For whatever reason, we're not here to debate on that. So OECD came up with various recommendations, and one of the recommendations in Pillar 2 was multinational enterprises should be subject to a minimum 15% tax rate from 2020. So that is a headline. I think there is some leaning towards a 15% tax rate in the local proposals as well, right?
Correct. So for those companies which are basically the foreign branches, they have a 20% tax on the income, and oil exploration company have about 55% tax on the income.
And there is also a differential rate proposed for the large multinationals.
Correct. So the tax rates are still yet to be released, but yes, there will be a differential tax rate for the turnover above 750 million euros, which is about 3.5 billion dirhams. So for those multinational, they fall into the differential tax regime going forward.
Okay. And we are yet to get the definition of the term multinational. It will be interesting once it is once we have the act in place. Now coming back, what this does to UAE, it makes UAE part of the most powerful multilateral treaty against offshore tax evasion. So that's one huge stature elevation for our jurisdiction consequent to this introduction. Now what this also means is, by default, UAE now has agreed to offer its assistance towards exchange of information on request, spontaneous exchange of information, automatic exchange, tax examinations abroad, simultaneous tax examinations, assistance in tax collection. So, with this, UAE now becomes a comprehensive taxation jurisdiction, and it elevates its stature, and it is no longer a tax haven as some people make it out to be. Now, what are the key objectives when we were to look at this particular proposed regime? Nabil, if you can throw some light on that.
Yeah. So primarily, this kind of putting UAE on the world leading hub for business and investment, as we already know. And it's also meeting the international standards for transparency and preventing harmful tax practices, which otherwise UAE was seen, to have zero taxes. But now with this, it's going to be helpful for the UAE to position itself to meeting the tax transparency. And it also helps in accelerating the UAE's development because it's another revenue stream for the country.
So now, with the tax being introduced, there should be a counterbalance, right? In terms of reducing the annual renewal fees or statutory fees which every enterprise is supposed to be paid. Do you see any movement in that direction, Nabil?
Very, very interesting, because on 31st of Jan, we had this information about UAE's corporate tax coming into position from the next year. And on the 1st of February, we had news floating around from the various Chamber of Commerces that the initiative has been taken to reduce the various fixed costs for operating businesses in terms of licenses, regulatory requirements, and other fixed costs which is currently levied are going to be looked into. And even the number of processes which are involved currently for probably a company to be incorporated or for the company to have its compliances done are going to be significantly reduced and make it more user-friendly and investor-friendly.
Brilliant, very interesting. So we are in for some very interesting times as far as the UAE regulatory scenario is concerned. So, Nabil, if you can take us through the tax slabs which are there at this point.
So it's very interesting to know that they have very simplified and kept it as just two slabs as of now. We'll just leave alone the differential rate which we discussed for Pillar 2 companies earlier. So it's 0% taxes for small businesses whose net profits or taxable income, in other words, don't exceed 375,000 dirhams per year, and a 9% flat tax rate on incomes above 375,000 dirhams a year.
Okay, so nothing else. And this 9% is on what income?
So for companies which are operating within the UAE, for businesses done within the UAE. So if the operating income is generated from the incomes derived from business done within the UAE, it attracts a 9% taxes on their incomes, on those incomes.
Okay, so foreign incomes, export incomes are outside the ambit of corporate tax.
Correct. They are outside the ambit of our corporate
And
tax.
what happens to investment income? Because most of the people tend to use Dubai to hold their investments.
So if the investments are part of your company, it still is being regarded as a business income, and there will be taxes on that. But however, for qualifying investments, where the definition of qualifying shareholders are still yet to be released, we'll come to know that in the near future. So there is a differential treatment for that. However, for personalized income, where an individual is invested in any investments and is getting an investment income out of that, that is exempt. But for companies, yes, it will be falling within the purview of business income if it is part of the business's investment.
That's interesting. So if a company is going to make investment in real estate and subsequently makes a profit by selling the real estate, it would still be regarded as taxable.
Yes, but if the company is getting a capital gain is still exempt. But if they are having rental incomes from that, that's taxable again as corporate taxes.
Got it. So interesting. So, but more on that once the fine print is available.
Sorry, can you repeat that?
No, we might get a lot more details on that once the fine
exactly. We will be getting clarity because we still have about 18 months for it to be effective. So we'll get a lot of information as we move forward.
Okay, that's interesting. So now this applies your commercial tax and corporate taxes. Does it apply to both free zones as well as LLCs, or only on local entities?
So I think, yeah, from the applicability point of view, it applies to all companies. However, when you look at free zone companies, the primary reason why they are formed is to complete their business transaction outside the mainland, where they import and export. So that's going to be the primary source of revenue. So those transactions which are outside the ambit of your general business within UAE are exempt. So let's take an example of a free zone company, which is completely outside the mainland and doing business of imports and exports. They are exempt from corporate taxes. But the same free zone company, if it has to import an equipment and sell it to a mainland business within the UAE, for the incomes derived out of those transactions, they will still be subject to taxes.
So this regime is very similar, if I'm not wrong, similar to the current VAT regime, right? where you have
Exactly.
a VAT on domestic and no VAT on overseas transactions.
Exactly. So what eventually this might happen is, your VAT and your corporate taxes could be linked, whereby for those transactions for which there is a VAT applicability, it directly forms in the ambit of corporate taxes transaction.
Got it. So let's move on in terms of what are exempt. So we've seen what are taxable. So from what you're saying, literally every business income which falls within the ambit of the commercial license would get taxed, as long as it happens within the jurisdiction of UAE, which is a local income. Now comes the question of what are the incomes which are exempt from the purview of taxation? You
So
can
if you
take it to that.
Yeah, sure. So if you're just talking about taxes, obviously salaries, investment in real estate in the personal capacities, dividends, capital gains, interest earned by individuals investing in bank deposits, savings, your general interest received are all exempted. Even dividends and capital gains earned by a UAE business from its qualifying shareholder, where the definition of qualifying shareholder is yet to be clarified at this stage, yes, they are also exempted. And certain qualifying intergroup transactions are also exempt. And foreign investors' income from dividend capital gains are also exempt from the purview of corporate taxes in UAE.
Got it. So Dubai can still be a great option for people to use as a holding structure for owning investments abroad.
Absolutely. So they just kept that as more a flourishing area.
So that's not going to affect the situation. Now let's come to the moot point in terms of how do you compute taxable profit for which you pay this 9% tax? Can you throw some light on that, Nabil?
Sure. Just like every other country, their taxable net accounting profit, or, your income minus all your allowable expenditure. And again, when I say allowable expenditure, we still don't have a definition clarification as of now on what are the expenses allowed. But in general terms, almost all business expenditures are exempted. And then you arrive at your net profit, which is called as a net accounting profit, and the corporate tax is applicable on that.
Got it. Well, that makes sense. And now we are getting into the prior period losses. That's very interesting because these are concepts that we have seen in US or India, or especially given the fact that we all come from India, which is one of the most complex tax regimes. Prior period losses. The current press release says that prior period losses will be allowed for set off. Now, what will be interesting to see is, would the losses prior to the period for which the tax regime began would be eligible for set off post the tax regime being introduced? Do we have any clarity on that?
So from the research articles that we have collated so far, it's very clear that only the losses incurred after the effective date, that is, let's say companies start accumulating losses after 1st July 2023, those losses could be set off against the future profits after the implementation. But the prior period losses before the, let's say, the year ended 2022's losses may not be able to be set off against the profit that you're going to be earning for 2023.
But that's helpful, Nabil. But what is very interesting here is they speak about tax losses of one group company being set off against another group company. So what is this concept of group company being envisaged?
So again, with subject to certain rules and regulations and conditions, you can form a tax group. So this again, the details about what kind of groups can be formed, what are the shareholding should be common for forming this tax group, it's still not clear. But with this coming in place, multiple organizations or multiple companies under the same or similar shareholding can form part of a single tax group. So it helps in two things. One group's losses can be set off against other group's profit. And again, from an administrative point of view, you will just have to file one tax returns vis-a-vis multiple tax returns for different companies.
Friends, this is again speaking from personal experience with other jurisdictions globally. This is one of the most profound provisions which is being introduced today, because invariably we end up seeing subsidiaries leaving, holding companies investing into subsidiaries in the form of capital, and the holding company has to make profits, use the after-tax money to make as investments, and subsidiaries are earning losses, incurring losses, and we are not able to set off this. The fact that UAE is even envisaging a regime where group company losses can be set off makes it one of the most visionary jurisdictions for companies to set up their operations. A very, very heartwarming and business-friendly provision. So moving on to free zones, Now tell me, what is going to be the impact on free zones consequent to the introduction of this regime?
So currently, if you see, mainland and free zone are treated similar in terms of the tax regime, but with the new corporate tax being implemented primarily to companies which are doing business in the mainland, free zones are going to be still looked at from a tax-free zones. And for businesses, again, as we discussed sometime earlier, for businesses done by free zone without any link to the mainland is going to be still tax-free. But what from our research we have understood that they'll still have to file a return for corporate taxes, but just to identify if they have done business within the local companies, within the mainland companies or not. But otherwise, they are exempted from taxes.
Got it. Got it. So the free zone regime would remain untouched as long as they don't do business in mainland.
Correct.
That's the sum and substance of what we're trying to do.
That's right.
Get it. So now, moving on to some of the ancillary provisions. I think the first and the biggest is we are not going to have a withholding tax regime.
Absolutely.
Fascinating. Because if you look at back in India, nearly 30% of the time of any taxation department goes in filing tax returns, ensuring the credits are in place, the matching happens with your tax credits and what is there in your accounts. That leaves so much of a headroom in terms of, I would say, more of a mind space issue and reduces compliance. But what are the other unique features which you might see or which you feel are there in the UAE withholding regime with the minimal information what we have?
Sure, Divakar. So as you mentioned, UAE tax will not be applicable on domestic and cross-border payments of any nature under this corporate tax regime. And the interesting part here is foreign taxes paid on UAE's taxable income, and UAE will be allowable to take that as a tax credit against their UAE corporate tax liability in order to avoid a double taxation avoidance on the same income that they have earned.
Get it. But I believe we may not need it in the current form of existence because foreign income at this point is exempt from tax in UAE.
Correct.
So if, let's say you are going to receive an invoice from Germany, which is subject to 15% withholding. Even though the amount is subject to withholding in Germany, we may not be making much use of it in UAE since it's a foreign income which is exempt from corporate tax. But still, the fact that it's available is a welcome statement. Now comes to our pet area of transfer pricing. So what is seen as far as transfer pricing regulations in UAE is concerned? My friends, before you could answer, let's, for the benefit of our audience, transfer pricing talks about a scenario where there are group company transactions or transactions with related parties, and the law mandates that the transaction with related parties should happen on commercial basis or what they call as the arm's length basis. Now, do you have a similar transfer pricing regime being proposed in the UAE as well?
See, currently, again, from the research, it looks like the UAE businesses will need to comply with the transfer pricing rules because for a corporate tax to be effective, the transaction should again be at arm's length price.
Correct.
So hence, yes, we do see that as per the OECD transfer pricing guidelines, UAE will also be implementing the transfer pricing rules for having arm's length transactions.
Brilliant. Okay. And what is it about the compliance part in terms of filing the tax returns? How easy or cumbersome the process is expected to be?
With the introduction of both VAT and what they're going to introduce as a corporate tax, what we see is from an administrative perspective and a compliance perspective, they've kept it very simple. So for the corporate taxes, it's just going to be one return a year. No advance tax is going to be collected. It's going to be filed electronically, and it's for the period of 1 year. Even for VAT, there are some companies which will have to still file their VAT monthly, quarterly, or annually, depending on the size of the organization. But for corporate taxes, it's just going to be once a year, and it's made very simple.
Brilliant. I think that's one of the most heartwarming features of Dubai per se, or UAE as an example, where they always find ways and means to minimize compliance and eliminate friction. And the fact that you don't have advance tax to be paid during the year, and it's only going to be a one tax return. And what's also heartwarming, friends, is if we structure the transaction as a group, it makes it even more interesting because it's only going to be one tax return for the entire group. That will be that will make life far simpler.
Right.
So, as you discussed, there are no advanced taxes at this point in time. Do we have any heads up on what the penalty regime is likely to be?
We do have a list of regimes for the VAT taxes already, which is in terms of late filing fees and undeclared income. So we feel that the similar penalties will be applicable for the UAE corporate taxes as well.
But we don't have any specific details as yet.
We still don't have that.
Okay, fantastic. So, to conclude, friends, the corporate tax regime in UAE is one of the most welcome steps because it's going to eliminate the cloud around its reputation. A 9% tax rate makes it one of the most competitive tax regimes in the world. And the fact that UAE is known to be a non-invasive, a trust-based, and more importantly, a frictionless jurisdiction. The transition to a 9% or a tax regime should not be a painful process for the taxpayers. And with the fact that the Crown Prince, His Highness Mr. Hamdan himself, from what we hear, has proposed a rationalization of the fixed fee or compliance fee for the UAE enterprises is going to make the regime a lot more competitive. The absence of withholding taxes and the introduction of group company tax returns, probably one of the first in developed economies, is going to make Dubai right up there. And the fact that losses can be set off between group companies is again a very, very innovative provision to work with. And what's also really interesting to observe, friends, is UAE has one of the most extensive double tax treaty network. So this only positions itself as a credible jurisdiction to deal with. So this is about the corporate tax regime proposed in UAE. More about this when we have a lot more insights into this space. Thank you, one and all, and thanks a lot, Nabil, for your
Thank you so much.
Thank you.